The IRS is sending out 4 million refunds this week to taxpayers who overpaid on their 2020 unemployment benefits. So let's get into this story. And by the way, this is 40bucks.com, where we help you master your money. So roughly 4 million refunds will be sent this week to people who overpaid taxes on their 2020 unemployment benefits, the IRS announced Tuesday. So due to the $1.9 trillion American Rescue Plan Act, which became law in March, up to $10,200 in 2020 unemployment compensation was excluded from taxable income for individuals and married couples with modified adjusted gross income under $150,000 last year. However, many taxpayers had already filed their tax returns before the legislation was approved by Congress and signed into law by President Joe Biden. For taxpayers who overpaid due to the exclusion, the IRS will either refund the overpayment, as it's doing this week, or apply it to other outstanding taxes or other federal or state debts owed. And the IRS already issued a round of refunds related to the exclusions in May and June, and the agency said it plans to continue issuing refunds throughout the summer. So the average refund is $1,265 for this tranche, and refunds by direct deposit will start July 14th, and those delivered via paper check will begin July 16th, the IRS said. Now, it's uncertain how many people are due an adjustment or refund related to this exclusion. A May report from the Treasury Department said that about 7.3 million tax returns processed by the IRS as of early March would qualify. So the Century Foundation has estimated that about 40 million people collected jobless aid last year, which is massive, and some would have gotten a bigger tax bill or a surprise one for 2020 without the federal tax break. So most taxpayers who collected unemployment last year do not need to take any action. However, the IRS said that if the exclusion was not claimed on your original return and the new calculation would mean you're now eligible for deductions or credits not claimed, you should file a Form 1040X, which is the amended U.S. individual income tax return, the agency said. And that's pretty much it for this story. But either way, it's like this can really help out a lot of people. But here's the thing. If you end up getting this, return, right? If you end up getting like a refund or whatever, and it's this amount, the $1,265. If you get this, right, this amount in your refund, what you need to do with this to really improve your financial situation is, one, make sure that your four walls are basically covered, right? Make sure you're able to live wherever you're living. Make sure, you're able to use your car, right? Make sure you got food, right? Make sure the things that you need are taken care of first, right? Because you got to actually survive, right? Next, if you have debt, you need to start paying down your debt. Now, there are multiple different ways that you could technically do this, and we go over why and how you should do this. But the best suggestion would be, let's say that your lowest debt is a credit card and you only got $1,000 on it, right? You should put the $1,000 from this onto that debt if you have some money in the bank already, right? If you have no money in the bank already, meaning you literally have no money in your bank, you're living paycheck to paycheck, what you're going to need to do is stick $1,000 minimum into your bank account and then use the $265 to start paying down your debt, right? Because the thing is, you need to get yourself into a situation that you could, at the bare minimum, cover your daily living costs and basically anything else without having to go into debt, right? Now, you could learn the secret to mastering your money so you could never have to deal with a situation where you're living paycheck to paycheck ever again, to where you're not in that situation where a $1,200 refund would actually change your life. And you could learn how to, learn to master your money down below. But The main thing to really understand is that use this money wisely, because the problem with this stimulus and all the stimulus that happened over the past, year and a half and all that kind of stuff, people ended up using this money on very stupid items, right? There's a lot of people that like bought Jordans. There's a lot of people that bought like a brand new purse. There's a lot of people that like went clubbing with it. There's a lot of people who just bought like a whole bunch of alcohol. There's a whole bunch of people who, bought like a brand new motorcycle or like used it as like a down payment for like a brand new car or something like that, right? And by doing that, it actually worsened a lot of people's financial situation. Now, here's the thing. If you had a good financial foundation, you had money in the bank, you had an emergency covered, you have money in investments, you're not hurting for the money, and you went and spent that money like that, that's perfectly fine. But a lot of people that spent their stimulus checks and their unemployment money and all this other stuff spent it on useless items, which don't help them at all. Because here's the thing. There's actually for example, there's some stocks, if you were to pick individual stocks, right? Or even cryptocurrency and all that kind of stuff. If you had put $1,000 into certain things at the start of all this, that people started to get these unemployment and all that kind of stuff, you could have literally made 6 figures, if not 7 figures from that, instead of doing something like spending your money on a brand new pair of Jordans. And this is the thing that people need to start understanding, is that when you have cash coming in that's excess of what you already have, and you are fine financially, you need to start accumulating assets. You need to start owning things that can make you more money, right? This is how the rich end up getting richer, is because after a certain point, after they cover all their living expenses, that they once they cover all of their needs, right? They can literally just constantly fund money into stocks, into real estate, into other businesses that will keep producing them more and more money, to the point where they could end up creating so much income that they will literally never have to work ever again, right? Now, technically speaking, you could actually do that at any income level, but it scales, right? You could technically do that on a $20,000 per year income if you have no debt, if your living expenses are very low, if you're able to live under your means to such an extent that you're only spending $10,000 out of the year, right, on your living expenses. You could technically put your money into investments that could end up creating a source of income for you, right? Just like the super rich do, right? The fundamentals are the same. It's just that when you have more money, you're able to expedite it and basically scale it up to such a higher extent. But the fundamentals are still the same, and it's still available for anyone of any income level, right? Because here's the thing. You could be living paycheck to paycheck on $20,000 a year, and you can also be living paycheck to paycheck on $200,000 a year, and you could be living paycheck to paycheck on $2 million per year. It all depends on how much money you are keeping and putting towards assets that will end up long term continuously giving you more and more money. And that's what you really got to understand. So the way you look at this money is deal with any debt that you have. Obviously, first create some sort of emergency fund if you don't have that, then pay off your debt, and then move on to starting to accumulate more and more assets. But again, if you need help learning how to master your money so that you're never living paycheck to paycheck ever again, go down below and learn the secret to mastering your money. And we'll see you in future episodes. Peace out.